Good day, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today is Thursday. It's January 19th. We've got 12 more days, and the first month of the year is over. Don't get me started. It's about 7:59 in the morning. The market's going to gear up to open up in about an hour and 31 minutes to be specific with you. I'm a few minutes earlier. Want to make sure you guys get off to a good start. And remember, my VIP room today is going to be at 10 a.m. Thursdays, I'm going to move it to 10 because, I want to make sure you guys know everything that's going on second part of the week. The second part of the week is very important, so we're going to have a 10 a.m. session today in my VIP room for all of my members. Now, volatility. Remember yesterday and the day before, I told you that the market is gearing up to move lower and that volatility is too low. Well, look at that. It's bouncing off the lows right here, and it looks like it's going to go higher. And if volatility via the VIX, $VIX, goes above 25, there's a good chance we're going to go back up to the $30-ish level. I'm not 100% sure it's going to happen, but right now, with the market down 274 points, closing down 600 points yesterday, things are not looking all that great. Now, we've got earnings. Oh boy, we've got a lot of earnings today. You've got, let me put it here, you've got Netflix. Very, very important stock to report. Last quarter, they pulled a rabbit out of their butt, talked about how they're going to crack down on sharing access. I think that's all just a bunch of nonsense. I think the company, and by the way, I personally love Netflix, but I think the company's got some major trouble. Basically, I'm seeing them as being the blockbuster of 2022 or 2023. Just the other day, I saw a new platform, MGM Plus, which is like Epix. The point is, they need to merge with somebody or they need to be bought out. I don't want to get into the whole thing, but I'm not liking Netflix right now. But we've got a lot of banks coming out today and Procter & Gamble. Obviously, Procter & Gamble is very important because we want to know if people are consuming, if they're buying toothpaste, if they're buying diet drinks. I don't know. Procter & Gamble, it's a consumption. It's a basic consumer staple stock. Very, very important. M&T Bank, our creditors making payments. They are a big payment processor. Debtors. Are debtors making payment, not creditors? American Airlines. What are they doing about commercial, the business class? That's where they make all their money. So I want to know exactly what's going on. And then there's some stocks here that we've been like SIVB. This stock looks like it's a crapper. So there's a lot of earnings today. But most importantly, we're looking at Netflix. That's a FANG stock. They're looking for earnings of 45 cents a share, which is negative 66% year over year. 66%. So it's not going to be a pretty number. Another major factor we're looking for is the bond market. Now, I'm hoping, I'm probably not going to get what I want, but I'm hoping that the bond market goes to the 110 level. If the bond market goes to the 110 level, I'm going to be selling it because I believe the bond market at that level will be overbought. And the sentiment is still bearish, but I want to see it break above this level right here, and it's not there yet. So I want to see it hit the 200-day moving average, which is right at the 110 area. If you guys see it hit the 110 area, send me an email today. Give me notice so I put a trade on. You can't make this stuff up if you tried. But anyways, the point is, I actually have people sending me emails saying, "Hey Roger, you said you were going to send a signal on this thing. When is the signal coming out?" It's happened before many, many times. Let's talk a little bit about global economy and what's on the table, because right now I'm seeing more downside, and once we get into the technicals, I'll explain to you why. Weak economic data and hawkish comments from the Federal Reserve officials bolstered concerns over the outlook of growth and corporate earnings. Data on Wednesday showed that retail sales and producers' price index dropped more than expected in December. And remember something about December. December is a holiday month, right? Shopping for Christmas. Retail sales declined in December. Not a good way to go into the end of the year. Industrial and manufacturing production fell more than anticipated. Not a surprise. U.S. stocks erased gains after Mr. Bullard and Mr. Mester emphasized the need to hike rates above 5% and keep them up there till 2024. And this is what I'm saying. We're not in a deflationary environment. People are getting too bullish too fast. Now, at the same time, Harker, what does he know, right? I'm just kidding. Supported a pace of slowing interest rates and said going forward due to sign of cooling inflation, slower pace of interest rates. Okay, well, great. We're going to go 0.25. 95.4% chance that a 0.25 base rate hike is priced into the market. I think that's almost a given at this time. Now, earnings are just starting next week, and the week after, we're going to really gear into earnings. This is just a taster. But we're now looking at a 2.6% drop, where in the beginning of the year, which was not that long ago, we're talking 19 days ago, as I said in the beginning of this video, we were looking at 1.6%. Today, we're looking at U.S. building permits data. We're also looking at jobless claims. Don't make Wall Street think that jobless claims is an issue, because it's not. The only issue is it's coming in really good, and it's questioning the decisions the Fed is making, because if employment is good, then what kind of a recession is this, right? You can't have a really good recession with an employment rate, breaking records to the downside. Housing starts data is going to be coming out. I'm not expecting anything crazy. I know things are looking better than expected. Folks, interest rates are going higher for at least another 6 to 8 months. There's no way housing is going to get better. I think last month they reported that 68 people backed out of contracts. Also, crude oil inventories are going to be coming out. Now, that's very, very important, and we're going to make sure and pay attention to see how that impacts XLE sector. Investors in Europe pushed stocks higher. Let's see what happened here. Investors pushed stocks higher on the hope that the Federal Reserve and European banks would ease aggressive monetary policy tightening and cooling inflation. Yeah, not going to happen. European Central Bank board members who serves the governor said Thursday the ECB would not stop with one single 50-point base hike at its next meeting. Yeah, that's kind of obvious. China closed higher, optimism over the recovery. Japan sharply lower, of speculation that their yield is going to get wider. Now, in terms of stocks, Alcoa, and I mentioned Alcoa earlier already, right here. They had earnings yesterday, right here, but I guess they reported after the bell. Let me go back to where I was. So they're down 6%. I believe, don't quote me, but I believe Alcoa is a Dow stock. That's not good for the Dow. DFS Financial, that's a company I really liked, plunged over 6%. Financials are not looking all that great right now. Financials is definitely not where you want to be today. In terms of earnings, as I mentioned, we've got a lot of earnings, but in terms of earnings that really matter, well, yesterday you saw Alcoa, Schwab, DFS, Wintrust. Today, you've got Netflix, American Airlines, Comerica, which I really like, Fastenal, which I really like, M&T Bank, which I really like, Procter & Gamble, which I really like, and SIVB, which I can't stand, and TFC. Tomorrow, we've got Ally Bank, but that's the big news. Now, let's talk about technicals. As I mentioned, I'm hoping that the bond market hits the 110 level so we can sell short, because I believe at the 110, it'll get a little bit overbought for the current time frame. Now, remember I gave you a big lecture and a reason why I believe, and how the algos are influencing the market. And I explained to you that recently what we've been seeing is these false breakouts. Well, guess what? Do you remember I said don't fall for this? I spent like 40 minutes in the last 2 weeks talking about this and how it's going to happen again, and it's happening again. And I also explained how the Dow's trading above the 200-day moving average, and it's not going to stay there very longer, and it's going to offset more, because if you look at the SPY, you will see the exact same thing, except everything's below the 200-day. See that brown line? See how the trading action, most of it is below the 200-day moving average? And notice how right here too, we came above this level right here. Looked like we were going to go up, just like we did right here. Breaks out. Look at this. Look. Doesn't it look like we're breaking out? Look at this. Doesn't it look like we're breaking out? Doesn't it look like we're breaking out? Hitting the 200-day moving average. I told you yesterday we're hitting the 200-day, and we're back there. That's what I'm talking about, and that's what you got to be careful of. And that's why a lot of the swing trading systems right now are not doing well, because we're kind of going back and forth. We're not having like any degree of trends. So you got to be very cautious. But I do believe the market is actually going to come back into this range, and it's going to start breaking down, which is why we're creating so many more short-term strategies. Now, to the downside, short-term strategies to the downside, we've got plenty to the upside. Now, today is Thursday, and Thursday I give you my top ETF and option pick, and I'm going to do that right now. Let's go to our ETFs right here. You may not be surprised that energy is still the number one, industrial, material, financial, healthcare. I'm good with these. I'm still good with consumer staples. And real estate is going to come down. I'm telling you, it's going to come down. But energies. And if I was a betting man, and actually they don't have as much correlation with all of this craziness that we're seeing. It's an ultra strong trend. Let me just see what's going on here. And we're still, we were above the 50-day moving average. Now we're not above the 50-day moving average, but I'm still liking energies. And a lot of energy stocks are doing well. My suggestion for you is maybe wait a few days and then go long the energy sector. Let me give you some strike prices and prices here. There we go. 57 days left. You should have enough time. Go with maybe the 90 strike price. You'll have plenty of open interest and liquidity, or the 95. One of these two, you can't go wrong, but you may want to wait a few days. We have a down route right now, and the volatility looks like it's going up. There's a lot of instability. It's probably best right now to sit tight and wait for the market to go down. I think we're going to go down to the base right here, and then we're going to stay choppy or break down. To me, when I was looking at this looks like a head and shoulders. Let me show you on the Dow. Like a head right here, a shoulder, and a head right here, and I think we're going to come down and break the 200-day moving average. I'm about 85% confident in that. And that's why I've been talking about momentum levels being overbought. That's why I was talking about sectors being vulnerable here. That's why I was talking about communication services breaking down. So you got to be very, very careful right now. Now, folks, most traders have no idea, but there's a major shift occurring in the market. Well, actually, maybe you do have some ideas. It used to be that stock prices affected the movement of options contracts. Well, now it looks like it may be the other way around. And we're starting to see options contract influencing the price of stocks. It was only a matter of time. Very soon, it could be more important to analyze options data than the stock itself. Because they're very sensitive, and we're looking at option volatility on the indexes. So that's why Jack Carter just teamed up with Celeste Lindman for a special presentation where he's going to reveal his number one stock that he believes will benefit most from this coming shift. Follow the link below. You don't want to miss this out. It's going to be really groundbreaking stuff. When I saw Jack doing this, I was so amazed and happy. I took notes during his class. You need to check this out. Follow the link below. Learn about this right now. Learn how options impact stocks and stocks impact options. It's very, very cool. It's very timely, and it's something you need to get into right now. Follow the link below. And remember, post comments in the YouTube Wealth Press channel. Talk to you guys soon. Bye. Have a great, great Thursday.